You worked for decades. You paid your taxes. You paid your mortgage. You paid your bills, every single one on time without complaint. So here's a question nobody has ever asked you directly. What if some of those bills you never actually owed? Not because of a loophole, not because of some trick, but because the law, your law, already said you were exempt and nobody told you. That is exactly what we are going to fix in the next 10 minutes. My name is Justin. I have spent years helping people in their 50s, 60s, and 70s untangle the tax and benefit rules that were always working in their favor, rules they never knew existed. And I want to be clear about something before we go one step further. This is not just for seniors who are struggling, and it is not just for retirees who have money. Whether your income is a Social Security check and a little savings, or a pension, a paid-off home, and an investment account, there is something on this list for you. I will tell you exactly which group benefits from every single point so you never feel like you are watching someone else's video. Let's go. Bill number 1, federal income tax. Let's start with the one that affects the most people and carries the biggest dollar amount. Federal income tax. Now, before you zone out because you think you already handle this, hear me out. Because there is a new law, and buried inside it is something called the Senior Bonus Deduction. Starting with the 2025 tax year, the return you file in early 2026, every American aged 65 or older receives an additional deduction of up to $6,000. If you are married and both of you are 65 or older, that is $12,000 extra. And here is what makes this extraordinary. This deduction does not replace anything you already have. It stacks on top of your regular standard deduction. It stacks on top of the existing over 65 deduction seniors already receive. You do not have to itemize. You do not have to give anything up. It is simply added on. So, what does that mean in real life? If you are a lower income senior living primarily on Social Security, stacking these deductions together very likely brings your federal income tax all the way down to zero. You may not even need to file. If you are a comfortable retiree earning up to $75,000 as a single person or $150,000 as a married couple, you qualify for the full deduction. It only begins to phase out above those numbers and does not disappear entirely until income exceeds $175,000 single or $250,000 married. The only people this truly skips are the genuinely wealthy. Everyone else, from the retiree on a fixed income to the couple living on $90,000 a year, gets real money here. One more thing. This is temporary. The Senior Bonus Deduction exists for 2025, 2026, 2027, and 2028. 4 years, unless Congress extends it. So this is a claim it every year while it lasts situation. If you use tax software, it will ask your age and apply it automatically. If someone prepares your return, confirm they applied it. If they did not, ask why. Bill number 2, tax on Social Security benefits. This one makes people genuinely frustrated once they understand it, because the mistake is so easy to make and so expensive to keep making. Here is the truth about Social Security and taxes. Whether your benefit is taxed depends on something called your provisional income, essentially your other income plus half of your Social Security. If that number is under $25,000 as a single person or under $32,000 as a married couple, 0% of your Social Security is taxable. None of it. As income rises, up to 85% of your benefit can become taxable. But even at the highest income levels, 15% of your Social Security is always tax-free. Now, here is where people get burned. When millions of Americans sign up for Social Security, they check a box on a form called the W-4V. This tells the government to automatically withhold federal tax from every monthly check just to be safe. And then every April, a big chunk comes back as a refund. Think about what that actually is. You are loaning the government your money, interest-free, for an entire year, On tax, you may not even owe. The fix? Look at your actual numbers, or sit with someone who can look with you, and file a new W-4V to adjust or eliminate that withholding so it matches what you genuinely owe. Not $1 more, not $1 early. And with the new Senior Bonus Deduction now in the picture, even more of you will find that the correct withholding from your Social Security check is 0. Bill number 3, property tax. This is the one that makes people angry, because this money has been going out the door for years, quietly, automatically, and it never had to. Property tax relief for seniors exists in virtually every state in the country, but it does not come to you. You have to go get it. There are 2 types of programs, and this is where income level really matters. If you are a lower income or fixed income senior, most counties and states offer a property tax freeze. Your tax bill is locked at the current amount and cannot go up, even as property values rise. Some programs go further and actually reduce your current bill. These programs are income tested, but the thresholds are often higher than people expect. Many working class and middle income retirees qualify and never apply. If you are a comfortable middle class retiree, the program is different but still real. It is called a homestead exemption, a flat reduction in the assessed value of your home before taxes are calculated. In many states, this is automatic once you register. In others, you have to apply once and it renews every year. The action step is simple. Go to your county assessor's website or call their office and search for Senior Property Tax Exemption or Homestead Exemption. Ask specifically what programs exist for your age and income level. Do this once. It can save you hundreds, sometimes thousands, every single year going forward. Bill number 4, Medicare premium surcharges. If your income is above a certain level, Medicare charges you more for Part B and Part D. This is called IRMAA, the Income-Related Monthly Adjustment Amount. Now, this surcharge is based on your tax return from 2 years ago. Not last year, 2 years ago. Here is why that matters. If you retired recently, or if your income dropped significantly, a spouse passed away, you stopped working, you sold a business, Medicare may still be charging you the higher premium based on income you no longer have. You have the right to appeal this. The form is called SSA 44, and it is sitting on the Social Security Administration's website right now. You file it, you show them your current income picture, and if it qualifies, your premium drops, sometimes by hundreds of dollars a month. This is not aggressive. This is not complicated. It is simply telling the government, my situation changed. Please update my bill accordingly. If your income dropped in the last 2 years for any reason, retirement, job loss, a death in the family, check whether you are being overcharged for Medicare and file that appeal. Bill number 5, tax preparation fees. The IRS funds 2 programs that provide completely free professional tax preparation to seniors, and most people who qualify have never heard of either. AARP, Tax-Aide, available to anyone. No age requirement, though focused on older adults and those with low to moderate income, staffed by trained IRS certified volunteers. In-person and virtual options available. VITA, volunteer income. Tax assistance, IRS sponsored. Free filing for households generally earning under $67,000. Certified preparers, real returns at no cost. If you are currently paying $150, $200, or $300 a year to have a basic return prepared, and your situation is not genuinely complicated, there is a real chance you qualify for one of these programs and are paying for something that should cost you nothing. Search AARP, Tax-Aide near me, or visit irs.gov and search VITA to find a location. It takes 10 minutes to check.